Good evening. Let your shoulders drop just a little. Feel the weight of the day begin to lift. You have carried enough today. You do not need to carry anything more. Let your breath slow down. There is no hurry here. Nowhere to be, nothing to decide. Tonight, we are going to think very slowly about one quiet idea. An idea about money. Not the anxious kind of money thought. Not the kind that makes you sit up and reach for your phone. The restful kind. The kind that, once you understand it, asks almost nothing of you. It simply asks you to let go, to trust something larger than any single choice, to trust the long, slow turning of the world. So settle in. Let the room go quiet around you, and when you are ready, we will begin. Imagine for a moment that you own a tiny piece of a bakery. Not a big piece, just a small slice. Perhaps one brick in the wall, if you like. That bakery sells bread every morning. People come in, they buy what they need, they leave a little richer, and you leave with a tiny fraction of that day's work. Not much. Almost nothing, really, on any given day. But now imagine you also own a tiny piece of a shipping company, and a tiny piece of a company that makes medicine, and a tiny piece of a company that builds the roads those medicines travel on, and another that writes the software those road builders use to plan their routes. Now you own a small piece of many things, hundreds of things, perhaps thousands. Some of those things will have a bad year. The bakery has a harsh winter and fewer people come in. The shipping company faces delays. But somewhere else in that long, quiet list, something is thriving. Someone is buying medicine. Someone is buying software. The road building is steady. You do not know exactly which part of your long list is having the good day. You do not need to know. You simply own a little of everything, and the whole mosaic moves slowly forward together. That is the heart of what an index fund does for you. It spreads your ownership across a very large number of companies, not just the ones that seem exciting right now, not just the ones a clever person chose last year, but the broad, whole, unglamorous canvas of business itself. You become a part owner of commerce, not any one company, commerce. And that is a quietly powerful thing to be. Think of it this way. you are holding a single apple. If that apple bruises, you have a bruised apple. That is all you have. Now imagine someone offers you a basket. Inside that basket are a dozen different fruits. Some apples, yes, but also oranges and pears and plums. A grape or two, even a mango. If one apple bruises, you still have 11 other things. The bruise barely matters to the whole basket. Now imagine the basket is very much larger. Hundreds of fruits, grown in different climates, sold in different seasons. Some tropical, some northern, some sweet, some tart. A frost in one region does not destroy the whole basket. A drought somewhere else does not either. Because the basket contains multitudes. Because the basket is the world, more or less. This is what investors call diversification. It is the practice of spreading your money across many different things so that no single bad outcome ruins you. And index funds do this almost automatically. You do not have to choose which fruits to hold. You do not have to spend your evenings studying apple charts or reading pear reports. The basket has already been assembled, built to mirror the market as a whole. You simply hold the basket. You hold it quietly. You hold it for a long time. And over the years, as the world grows and builds and trades and invents, the basket tends to grow with it. Not in a straight line. Nothing in finance grows in a straight line. But over long stretches of time, the basket has been remarkably persistent, remarkably patient, remarkably unconcerned with any particular bad day. Because baskets are not measured by a single fruit. Here is something worth understanding slowly. Every investment has a cost. Sometimes that cost is obvious. Sometimes it hides, but it is always there. When someone manages money on your behalf, studying companies, picking stocks, building a clever portfolio, they need to be paid. And they charge that payment as a small annual fee taken from whatever your money earns. A small fee seems harmless, and in any single year it is. But money, as you may have heard on this channel before, grows in a particular way. It grows on itself. The earnings earn earnings, and those earnings earn more. It is a slow, compounding process, a quiet snowball rolling down a long hill. When you take a little off the top every year, just off your earnings, but off the base that would have kept growing. You are not just losing that fraction of a percent. You are losing everything that fraction would have earned for the rest of your life. Over 20 years, over 30, the difference between a higher fee and a lower fee becomes astonishing. Imagine two rivers flowing side by side. One is slightly narrower than the other, just a little. You would not notice standing at the bank. But follow both rivers for 100 miles. The slightly narrower one has lost enormous volume. Rivers, like interest, compound their width. Index funds tend to have very low fees because they do not require someone to spend long days picking and choosing. They simply follow a rule: own everything in proportion to its size. That is a far cheaper operation than trying to be clever. And that difference, small in any year, large across a lifetime, quietly benefits you. This is not an exciting feature. It does not make for a good headline, but it is one of the most reliable advantages available to ordinary investors. The cost matters more than almost any other thing you can control. Now here is something that sounds simple and turns out to be remarkable. Over any given long stretch of time, most professional investors, people who spend every hour of their working lives studying companies, reading reports, speaking to executives, building complex models, most of them do not beat the broad market. Not over 20 years, not over 30. That is a strange and humbling thing to sit with. You might think, if I simply hire the smartest person or find the best fund, surely that person will earn more than the simple, uncurious basket. And sometimes they do, for a while. A brilliant investor might have 5 excellent years, or 10. The problem is that the future is genuinely hard to know. Markets absorb information very quickly. By the time a piece of news feels significant, 10,000 professional analysts have already read it and traded on it. Prices in a healthy market already contain most of what is knowable. This does not mean markets are perfect. They are not. They are made of human beings, and human beings are often frightened or greedy or very wrong. But it does mean that finding someone who will reliably beat the market, year after year, decade after decade, is much harder than it looks from the outside. And there is another layer to this puzzle. Even if you find a great investor today, identifying them before their great performance rather than after turns out to be nearly impossible. Past returns, as you have probably heard, do not guarantee future ones. The investor who had a remarkable decade may simply have been well positioned for a particular kind of market that will not repeat. The gentle conclusion that many researchers have arrived at after decades of study is this: for most people, most of the time, simply owning the whole market, the full, boring, undiscriminating basket, produces better outcomes than trying to pick the winners. Not because trying is bad, but because the market, as a whole, is doing the work of every clever person in it. And you, by owning the whole thing, capture that work collectively. There is something quietly democratic about that. You are not betting on one genius. You are betting on the entire enterprise of human commerce. Let us stay with this thought for a moment. When you own the broad market, you are making a certain kind of peaceful choice. You are saying, I do not know which company will thrive this decade. I am not certain which industry will grow the fastest. I cannot predict which country's economy will surge or slow. And rather than being anxious about not knowing, you are deciding to own a little of all of it. You are releasing the need to be right about any particular thing. This, for many people, is a relief, a genuine one. Most of the stress of investing comes from decisions. Will this company succeed? Is this the right time to buy? Should I sell now before things get worse? These are exhausting questions, and they are mostly unanswerable with confidence. By stepping back from the game of picking and choosing, you step back from that exhaustion. You are not pretending the market is safe. It is not always safe. Prices fall. Sometimes they fall sharply. But you are saying, I do not need to protect myself from every fall by being clever. I will protect myself simply by owning widely, by staying calm, and by keeping my time horizon long. This is not a passive attitude in a bad sense. It is a kind of active trust, a chosen patience. You are trusting that over time, human beings will continue to build things, sell things, discover things. That commerce will persist, that the long story of economic growth will continue even if no single chapter is guaranteed. It is a generous bet on the future, and it requires very little drama to maintain. Let us talk about time. Not time in the anxious sense, not the ticker of days before a bill comes due. Time in the large sense, the slow, biographical sense. Money invested in the broad market goes through seasons. There are winters, sometimes long ones. Prices fall and stay fallen for a while. The news becomes frightening. Experts argue loudly about whether the world is ending financially or just resting. Most winters end. Not immediately, not on any schedule you can know in advance, but they end. And the spring that follows a winter tends to be fertile. Prices recover. Often they recover more than they fell. The history of markets, at least over long stretches of the last century, has been one of general upward drift, interrupted by painful but temporary drops. The investors who kept their baskets through the winters did better, on average, than those who sold in fear and waited for certainty before returning. Because by the time certainty arrives, by the time everyone agrees the coast is clear, most of the recovery has already happened. The calm investor, the one who simply held and waited, was already there. There is a lesson in that. Not that you should ignore bad news, not that risk is an illusion, but that the response to uncertainty in investing is usually patience rather than action, stillness rather than scrambling. The long view is not just comforting, it tends to be more accurate. A week is a very noisy thing. A month is noisy. Even a year contains a great deal of noise. But 10 years begins to smooth. 20 years smooths further. The underlying direction of the whole economy starts to become visible through the static. You are not a trader of days. You are a holder of decades. And that is a quiet and powerful thing to be. There is something this culture does not celebrate enough. The simple thing, the obvious thing, the thing that does not require special knowledge or a screen full of charts. The investment world is very good at making itself seem complicated. There are products with long names and complex structures. There are strategies that require constant attention. There are newsletters that promise to reveal the secret the market has been hiding. None of that is offered here, because the research, honestly, is not flattering to complexity. The simple approach, owning the broad market, keeping costs low, holding for a long time, adding a little whenever you can, has outperformed most complicated approaches over most long periods. Not always, not in every year, but on average, across the many thousands of real investors whose results have been studied, simplicity wins more often than sophistication. This should feel like a relief. You do not need to become an expert. You do not need to read 20 books or follow a dozen analysts or watch the market every morning. You need mostly to make a calm decision once, and then to leave it largely alone. To resist the urge to tinker when things go down. To resist the urge to pile in when things are going up. To maintain the boring posture of the patient holder. The investor who invested steadily, touched nothing, and went to sleep for 30 years tends to have done very well. That is not a joke. It is a recorded observation. Boredom in investing can be a feature. Activity can be the enemy. And an index fund is almost perfectly designed for productive boredom. There is nothing to watch, nothing to compare, nothing to agonize over. You own the whole thing. Whatever happens to the whole thing happens to you proportionally, slowly, over time. You are a partner in the whole enterprise of business. That is all, and that is enough. Let us talk gently about the hard times. Because they will come. They always do. There will be a year, perhaps several years in a row, where the news is bad and prices fall, where you watch the value of what you have accumulated drop by amounts that feel enormous and frightening. And in those moments, something very human will happen inside you. Your mind will begin to construct stories. It will say, "This time is different. This time it will not recover. This time the old rules do not apply." These stories feel very convincing. They are often delivered with great urgency. Smart people will appear on screens to explain why they are correct. They are usually wrong. Not always. History is not a guarantee. But the story of this time is different. Sell everything, and wait for safety has been told many times, and most of those times, the people who acted on it regret it later. The person who sold at the bottom and waited for certainty watched prices recover from the sidelines. The person who held, who simply sat still and breathed, and did not look too often at the numbers, often came out on the other side in a reasonable position. This is not easy. It requires a quality that does not come naturally to most people. It requires the ability to feel afraid and do nothing. That is a skill, a real and learnable one. One way to practice it is to simply look less often. If you check your investment daily, you will experience thousands of frightening data points over a decade. Each dip will spike your stress. Each recovery will spike your relief. You will be riding an emotional roller coaster that has nothing to do with your actual long-term situation. If you check it once a year, you will experience 10 calm observations across a decade. Most of them will show a number larger than the last. The investment did not change. Your experience of it changed entirely based on how often you looked. There is wisdom in that. Tend to the long garden. Let the short garden be noisy. You do not live there. We have talked about owning many things. We have talked about fees and patience and the storms that pass. Let us bring it all together very gently. When you own a broad collection of companies, something begins to happen over years that is quiet and enormous. Those companies are not standing still. They are working. Every day, the businesses you partly own are making things, selling things, improving things, hiring people, building products, finding customers. Some of that activity produces earnings. Those earnings, in many cases, get reinvested back into the companies, which earns more, which gets reinvested again. And on it goes, quietly, without drama. Year by year, the underlying value of the whole canvas tends to grow. Not because you did anything clever, not because you picked the winners, simply because you were a patient part owner of a large collection of ongoing human effort. And your fee is low, so most of that growth reaches you. And you did not sell during the winters, so you were there for all the springs. And you added a little money whenever you could, which means more of the canvas belongs to you each time. This is not a trick. It is not a shortcut. It is just the slow, patient arithmetic of ownership multiplied by time. A seed planted, watered, and left alone. You do not need to watch it every day. You do not need to understand every root. You simply need to leave it in the ground and let the quiet biology of growth do what it does. The canvas grows slowly. Then it grows a little more. Then, over decades, the painting becomes something you could not have imagined from where you started. That is the quiet wisdom of this approach. It is not glamorous. It does not make for a good story at dinner parties. No one will ask you breathlessly what your hot tip was. But it works with a steadiness that more exciting approaches rarely match. You have done well to arrive here. You understand something now that many people never quite stop to absorb. That owning a tiny piece of many things is wiser than betting everything on one. That low costs matter over the long, slow decades more than most people realize. That the experts, for all their intelligence, rarely do better than the humble basket. That patience is not just a nice quality to have. In investing, patience is strategy. And that simplicity, honestly, is the quiet edge. You do not need to do anything with this tonight. You do not need to make a decision or open an account or call anyone. This is not that kind of lecture. This is only the kind that settles softly into your mind, the way good understanding tends to do. You were here, and you listened, and something was gently placed inside you. Maybe you will think of the basket next time you feel the pull to do something dramatic with your money. Maybe you will think of the winter and remember that winters tend to end. Maybe the next time someone promises you an exciting shortcut, you will feel the calm resistance of someone who understands what simplicity actually offers. Or maybe you will simply sleep. That would be exactly right too. The market does not need your attention tonight. The basket does not need tending. Whatever seeds you have planted in this life, financial and otherwise, are in the ground. They are doing their quiet work without you. Let the world turn without you watching. Let your breath slow all the way down. You are safe here. You are warm. You are not behind. You are, in fact, exactly where you need to be. Rest now. Close your eyes and let the long, slow arithmetic of patience work on your behalf in the dark while you sleep. Good night.